Hey everyone, Lee here, Market Watch team. Just wanted to share with you awesome source strategy and a quick rundown of how it works and the key factors, key elements of the strategy. First two key things you really want to be aware of are the red line, which is the source line, and the blue line, which is the awesome line. Your red line is your primary higher time frame overall trend, so direction of the market and first indication of reversal or potential reversal in the market. The aqua line, which is the autumn line, that's where your entries come from. That's all your entries, that's all your setups, that's your primary line that you'll be focusing on for day-to-day intraday trading. So as a quick rundown how the red line works, very simple as a primary trend line. Oh, as a side note, these do not change calculation based on the time frame you're on. No matter what time frame you're on, they'll be the same calculations. So you can drop onto the 15-minute and see where this is based on a 5-minute calculation. You can drop on an hour and that will stay the same. Same with this one. This is based on an hour calculation. Whether you drop onto the 4-hour or the 5-minute, that will always stay the same. So you can be looking at the 5-minute, still sort of know where the overall trend is on the hour. The way the red line will be working is just standard trend line. If you're under, you're going to be taking the trend down. When it crosses above, you're going to be looking to take it above. It's set to quite help you with reversals as well. So at the point that the market starts to break above, it's giving you a good sign that we're going to be doing at least a decent retracement or the market's going to be turning over. And usually the way it's set is it takes into account usually the choke. So by the time that that's fully turned over, you've had a number of chokes, and usually first impulse and then you're coming back and then you retest, and that is quite a good zone to look for entry. That's quite a good trade zone on its own to look for entry, and you'd be dropping down time frames and looking for the setup off the awesome line, which I'll show you shortly. Setup of that. So that's really how the red line works. Trade down, trade shorts while you're under it, longs while above. But as you get to the point that it starts to turn over and break, you look for nice clean setups, and then you can potentially get reversals the other way. But again, that doesn't hold. Nothing holds, comes back under, and then you get a nice clean break under, and you get a really nice push down. So that's how primary trend works. Give you an indication, help you track where the market's going, or if a reversal's ready. So a lot of the time, if I'm looking to trade a high time frame harmonic pattern, and this is the foot of the leg, I will be waiting for the choke and the cross of this red line, and then I'll be zooming in looking to get an entry. And usually if you time it right and wait for the key indicators, you'll get into very limited drawdown and you'll catch the move at the end of this. So you won't be getting in early and going through this pain that is into profit, into drawdown, into profit, or hitting break even. You get in, you get the market, and then the market will fly and it feels good. So let's have a quick look at how we do the entries and how I set up day to day. Wait for it to load. So the process is really simple once you've practiced it and got used to it. What we're looking for is we're just looking for price to break and retest the awesome line, which is the aqua. Step 1, break and retest the awesome line. Step 2 is these EMA clouds. These EMA clouds are designed to give you a real good indication of when the market is both balanced and ready to make its moves. So at the point they get really thin, it's saying that price has now balanced. Market auction theory, price is balanced out. It's ready to make that impulse, and the next impulse it's going to make is going to be a significant move. So usually you've had your consolidation. So you've got price strong, price is balancing, price is going through accumulation, balancing. Prices got really, the clouds have got really thin. Price gives you an entry model with the clouds being thin. Yeah, so clouds thin, you get your nice entry signal as we get that breakout and first little impulse moves. So entry signal wise, your triangles. Your triangles are swings in the market. So they're primary trend swings. So they're really strong to tell you when the market's turning and going the other way. So I'm always looking to make sure that number 1, we have a triangle before I'm looking to enter the market. Number 2, perfect situation, triangle on your entry candle, your CC candle. And then your entry signals, the primary entry signal I look for is the diamond. They don't spawn often because there's a range of different parameters behind the scenes that cause that diamond to spawn. But if you get a diamond, you get a triangle, and you get a yellow candle body. The yellow candle body is an alignment of the DMI and a stock and a few other parameters behind the scenes. So that's a good additional signal that the market's ready. So diamond or entry signal with a triangle is what you're looking for. Everything on the same candle, even better. Almost a guaranteed trade if you're set up with the right clouds bouncing off the 400. So basically what we've had now is we've had break and retest, thinning of the clouds, triangle to confirm new trend may be starting, and we've had your entry signal. So you've got your CC, you've got your confirmation candle. What you then want to check is at the point you've had your confirmation candle, or just before, just after, has the MACD crossed the 0 line? If so, yes, that's rule number 4 basically. I've got it down as 5, but it's rule number 4 here really. Normally the clouds will not have opened up, which I'll explain in a second, until after you've had your entry signal and the MACD cross. If you get a coloured bar in the MACD, that's an increased strength of cross. It means certain things have lined up all on the same candle. Makes your entry signal a little bit stronger. Again, just stacking the chances in your favour. Now once we've had that, I will put a vertical line on my entry candle. That confirmed to me now that all the criteria has been hit. I'm not going to second guess myself. I'm happy to enter this trade. I'm just looking for the best point of entry. And usually what I will do is just simply enter by market if the candle's quite small and my stop loss is quite tight, or set a pending order for 50%. Stop loss will be just outside, 1 or 2 pips outside the last significant low, and I like to make sure that I'm outside of this awesome line because that acts as quite a high resistance. And then as a basic model, I'm going for 1 to 2 minimum. 1 to 2 minimum. I usually take most of my partials out at around the 1 to 2 mark and then leave the rest risk free to do what it does and then just trail. If you're not sure about the market and if you want to really be sure the trade's ready and it's not going to turn the other way, a little trick that I have found is if you drop down to the 1 min, that was your entry confirm, and you probably would have confirmed the market was started to open its clouds here on the 5 min. Wait for a repeat of what you've just checked here, but on the 1 minute. So clouds start to retrace, the clouds start to get thin. We have the impulse candle. That's it. You can either enter there or you can look for a little pullback and you've got into the market. And you might have one little pullback, but then usually it's quite a clean, nice run all the way up to your TP. So that is the basic AwesomeSauce setup. Break and retest. Clouds thin. Entry signal with a MACD cross. Clouds open. Then you're looking for your pending order or buy market entry. Again, drop to the 1 min. Wait for a repeat of this entry setup to confirm that the market's ready to go. That will help you not get into trades that may turn around or may come deep into drawdown before being ready. So myself, I often use pending orders because I've usually looked at some further analysis on the market. But if you're just purely trading off the AwesomeSauce, the 1 minute is quite a good confirmation until you get comfortable with the process. One other little trick to check is if you jump once your trade's getting ready or you think your market might be in a good place to take, jump up to the 1 hour and see how the clouds thinning on the 1 hour. We're looking to change direction like here. Basically, we've had a pullback and we're looking to see is the market ready to carry on the uptrend? Are we ready to carry on this impulse? So realistically, same as the process we've just done on the smaller scale, wait for the clouds to cross, wait for them to get thin. We're now getting ready. So we'll see how this goes after the weekend, but I think this has got a good chance of carrying on up, potentially up to somewhere up here if it breaks that high. So a really important little trick if you're unsure, if you're waiting for the market to turn over to confirm that a retracement has finished, is wait for those clouds to cross back over, get thin, and then you're looking for your 5-minute entry. That's it, guys, really, for sauce. Any questions, just DM me or ask in our group chats, and we'll go over some more examples. Thank you very much. Happy trading.